Hi, good morning. Welcome to my channel. Myself, Dr. Gunakala, working as associate professor in Wings Business School, Tirupati. In this session, we are going to learn the goals of financial management. These are the learning outcomes of today's session. We must know the goals of financial management. Similarly, we have to know the profit maximization. Similarly, wealth maximization. So the goals of financial management, the firm's investment and financial decisions are unavoidable and continuous and make them rationally. Here the company they must have their own goal, that's a profit maximization and wealth maximization. The profit maximization is the traditional approach and the primary objective of financial management. It represents the process or the approach by which profit is increased. So here the company they are having the fundamental objective like in the profit maximization. The profit maximization in the sense whenever we are going to establishing the organization, the first and foremost importance of the organization to earn the profit. The profit is the basic parameter based upon the ability of the entrepreneur, based upon the ability of the enterprise. So, if the company's profit will be keep on increasing, ultimately the ability of the enterprise is also increasing. So, the company they are working on the track what is going to expected by the particular top level management of the organization. The advantages of the profit maximization, once the company they are earning the sufficient profits, they can economically survive. So, for facing the competition, here the keep on working will be the safeguarding of the organization. So, that the company they can earn the profit for surviving in the present society. Similarly, the profit maximization is acting as the measurement standard for the organization. While the investor, whenever they will go for the investment, the first and foremost criteria what they are going to analyzing the profit of the organization, who is the person who is leading in the particular segment. Similarly, based upon the social welfare, if the company they are earning more and more profits, the company itself also they are providing certain kinds of the corporate social responsibility activities towards the benefit of the society. Similarly, some of the economical welfare schemes also provided by the organization based upon the profit, like in the charities, especially if you are go through with the certain kinds of the scholarships or it may be in the form of the fellowships which is offered by the top MNCs or some of the companies. Similarly, the disadvantages of the profit maximization. The disadvantages, the haziness of the concept, because whenever the people they are doing the business, the completely working on the profit aspect is also one of the major problem for the organization. If the people they are concentrating on the profit, sometimes they are lacking the quality of the product, they are lacking the quality of the service, so that the people they are not having that much of the interest regarding to the company's product as well as the services. Similarly, here the company they are ignoring the time value of the money. The time value of the money, so which is going to affects the overall profit maximization of the company. Similarly, we know that the ignore of the risk, the maximum risk which is taken by the company, so that the return is also maximum. So already we're discussing, it may be in the form of the ignores the quality of the particular product or service. The second and most important objective is wealth maximization. The wealth maximization we will also call it as the shareholders wealth maximization or value maximization. A shareholder holds share in the company and its wealth will improve if the share price in the market increases, which in turn is a function of net worth. Whenever the individual share price is increasing, ultimately the value of the shareholder will be increasing. Similarly, the wealth of the company is also increasing. For the calculation of the wealth, the net present value of the financial decision. The net present value, which is the valuation of the present value of the cash inflows as well as the present value of the cash outflows. So the wealth maximization model versus the profit maximization model. So based on the cash flows and not on profits. The wealth maximization is completely based upon the cash flows, but not based upon the profits. The profits can be manipulated, but the cash flows cannot be manipulated. Similarly, profit maximization presents a short term, whereas the wealth maximization is present in the long term. The timing of returns is ignored in the profit maximization. That's what we are discussing in the form of the disadvantages of profit maximization. We cannot go for the time frame when the company they are going to getting the profits. So sometimes the company they are under the losses and sometimes they are under the profits. But whereas we are discussing about the wealth maximization right from the beginning of the organization, based upon the present position, we can calculate. For that, we are using the equation like the phi 1 by 1 plus r plus phi 2 by 1 plus r whole square plus phi 3 by 1 plus r whole cube plus and so on pi n by 1 plus I 1 plus r whole to the power of n. The pi represents the initial profits of the company, that's the first year profits, whereas the r represents the rate of interest. Similarly, the pi 2 represents the second year profit of the organization. The pi n represents the nth year profit of the particular organization. By using the particular equation, we can know what is the overall wealth of the organization. The wealth which is not based upon the present assets as well as based upon the future projects which is going to handled by the organization, we can also consider. Similarly, the profit maximization considers the risk and uncertainty factors. Similarly, whereas the wealth maximization, they are also is considering the cost advantages in the organization. So, for the evaluation of the wealth maximization, we are having NOPAT. NOPAT in the sense net operating profits after taxes minus the capital employed. The capital employed in the sense for getting the profits, how much of the capitals which is utilized by the organization, we will call it as a capital employed. Similarly, the weighted average cost of capital, WACC represents weighted average cost of capital. So here the company, they are maintaining different sort of the capital like an equity, debt, preference. So each and every capital, they are having their own cost. The cost in the sense, the dividend which is going to pay to the shareholders, we will call it as the cost of equity. If the interest rate which is going to pay to the particular lender, we will call it as the cost of debt. The preference dividend which is going to pay to the preference shareholder, we will call it as the cost of preference share. So the weighted average cost of capital which represents the different sort of the cost of capital on the given capital based upon the availability of the capitals. So here the sources of wealth creation, they are having two kinds. One is industry attractiveness and competitive advantage. Industry attractiveness in the sense the barrier to competitors entry. So for example, so if I am having the capability to fulfill the existing demand, so we can reduce the entry of the competitor, so that what we have to do, we have to maintain the wealth. The wealth in the sense, if the shareholders are satisfied with the current company, they are not moving out from our existing company. Similarly, we can go for the substitute to the existing players while giving the competitive environment. Similarly, the bargaining power of the buyers. So, here the customers, here there is an industrial buyer is there. So, if I am having the competitive environment, if I am having the competitive advantage, so I can able to bargain with my suppliers. Similarly, the competition among the competitors. The competition among the competitors. So, while we are going through with the wealth maximization creation, we can provide a wealthy competitor environment among the competitors. The competitive advantage, we can go for the cost advantage, we can go for the differentiation advantage. So while we can able to minimize the cost of the production, we can provide the best in class of the price. So that's what happening in the form of upon entry of the Geo in the telecommunication sector. They are using the strategy like in the cost advantage. They are using the strategy like in the competitive advantage. That's it. The majority of the telecommunications services on entry of the Geo, most of the companies they are washing out because of they couldn't able to provide the price which is prefixed by the Geo. So here the people they are having different sort of the cost advantages. Similarly, the differentiation advantage while we are providing the innovative product, while we are having the pricing strategy, it may be in the form of the innovation pricing strategy. So these are all making the differentiation in the existing models. So the wealth maximization in the sense the increasing the value of the share ultimately which influences the value of the shareholder. The profit maximization is the fundamental objective of any organization, but the wealth maximization is the utmost priority and then the most important objective for any organization if they are look after to survive in the long run. So thank you for watching with us. If you like this video, kindly subscribe. Thank you. Thanks a lot.